Okay, so yeah, yeah, I really do like being awake and with you guys at this hour. I like the idea of us trading together. Everything that we put in is simulated, basically, because nothing's going to go through until the following day in the evening. So this way we can do it together. If there's an opportunity, we can actually trade it together, which is really good. And then, like I was saying, I think I might start doing, I will start doing an update during the week. If I see something that's coming in front of us, I'm probably going to do a short 15-minute video audio update in case there's something that I want to see done in some of our trades, things like that. So we'll start doing that soon. And then, yeah, that's what I'm looking forward to there. And don't forget, you guys, we have to look forward to our ski session in some valley. I hope we're still all planning on that. Our retreat, our trading retreat. Um, I was just talking with a couple buddies that went up to mountains in Idaho, and they said the powder is packed. So if you're not a skier or a snowboarder, it's time to start learning because the powder is fresh and I'm ready to hit it. I haven't gone at all this year, so I really want to. I was supposed to get a surgery on my shoulder last week. That's a long story. I'll save that for another time. But that did not go through, which is kind of sad because I can't really use my right shoulder for very much. After a certain period of time, it starts to hurt really bad. I have a torn ligament in there, so that really sucks. But that just means I can go snowboarding, which is great. So we'll have to discuss that in detail. Some fun things to look forward to. Okay, let's just get cranking here. First things first, this euro dollar trade. I don't know if you guys recall, but I told you guys I was looking at a trade opportunity with this guy, and I think it was right here at the time. I think it had broken out, yeah, just like that. And I entered right around here, and it was a really short play. I was expecting this. I think I talked about it. I said I'm looking for it to go down to 122, and then my second target will be about 121.50. I have my stop short, very, very short. I think I had it at 122.90. So I believe I got in at 122.60. So just a 30 pip stop. And you can see here that I got very close getting stopped out, which was fine with me because this could have easily just continued its trend, but it didn't. It sold off and sold off. I hit my first target here and my second target there. So I walked away with a good amount of pips, which is great. And this is a trade that I shared with you guys. I don't know if you were able to execute it, but these are going to happen all the time. You have to be very comfortable with just looking at the charts and saying, hey, there's opportunities here, there's opportunities there. And they're going to be short term sometimes, very short term. We're on an hourly chart. Now, I'm not telling you guys to sit in front of your charts all day, nor do I think you have the time for that. I know everyone here's got a very busy schedule. What I look for is I look for the opportunity on a daily chart. And then I'll zoom in, and if I see that it may be starting to break, which I saw this candle right here starting to do, then I zoom in on my 4-hour. Okay, so this is just a systematic approach. So we go from a daily to 4-hour. So then I see it starting to trade below my little trend line here. So then I'm going to look for a more precise entry, stop loss area, and target area. So then I was able to figure out, okay, I would like to get in around this trend line area, and I will set a stop above it just in case it doesn't work out. And that's how I go about those things. And then I use my indicators. The indicators are important to help us decide what's going to happen here. On the short term time frames, they lag a little bit. They're not as useful. So, for example, on the MACD here, we had a crossover here to the upside, which would indicate bullishness, right? So just because I had that crossover doesn't mean I'm going to get out of this trade. However, it could have easily just kept on going, right? That's why we gave ourselves just a little bit of room. My main sole focus on this one was purely price analysis based off of support and resistance. That's all it was. I didn't use any indicators other than I looked for a particular set of targets. And I did that using our pivot points and our 200 moving average, which is, where is it? Oh, that's right. It's up there. So I could see that it's hard to see. I could see that the 200 moving average, it had broke below it. So if it had stopped, let's just say the 200 moving average was here, or sorry, right here, and it was kind of tracing along it, that would have made me a little hesitant because it might have, the moving average might have been a source of support, meaning price might have been per se dancing on it. And that happens a lot where you'll see price just kind of dance on the, it'll just kind of play along this green line here and then move on up, or they call that a bounce, right? So what I was looking for was, there we go. What I was looking for was a close below that to give me more confirmation, right? So that helped me feel a little bit better about that. And then I used my pivot points for targets. So you can see right here, here was one of my targets and it hit it beautifully. And then the other target was simply just a shorter term one because it was a shorter term trade. So I was thinking if it's getting down to 22, then I'll go ahead and take some of my contracts off the table. So I took a couple off there at 2022, right there. And then I took the rest of them off right here when it hit this 2150, this pivot point area. So that was the strategy behind that. And this is going to be a repeatable, very, very repeatable process. Let's take a look at how repeatable it's going to be, I think, very, very soon. Let's just run down our pairs here. There we go. Okay, so New Zealand dollar had a big breakthrough, just like the euro dollar did. I don't think it's an opportunity to get short at the moment, but I do think we have a missed weekly pivot point right here. Okay, price has yet to touch that, and we have a large amount of space, right? We have, where's my jigger here? There we go. We have a large amount of space going on here. So the more space we have between our moving average, the more likely we are going to get our sell-off, right? So we've got that missed pivot, weekly pivot, we've got a missed daily pivot. So we've got some targets to attack here that are easily possible. Here's another weekly pivot down here. So you can see that there's plenty of targets that have been left on the table. And then with this huge gap between our moving average, we're likely to probably see more of a sell-off. So what we want to do is we want to see a little bit more of a pullback. I'd like to see price do a little bit of coming back up just a hair, and then eventually coming back down. How far it will go, it's hard to say. Let me go ahead and delete this alert. There we go. I don't think we're going to get anything. It's not likely we'll get anything down here. The only way we're going to get anything down here is if we see a correlation in the market or sell-off, and we'll talk about that in a sec. But so there's the New Zealand dollar, the Aussie dollar. This one's setting up a little bit better in terms of an opportunity that hasn't quite occurred yet. So get rid of this. Actually, we're going to move this. There we go. Okay. Yes, I would like to save that. Let's look at that in a 4-hour time frame. Auto adjust. There we go. If you're not familiar with using a lot of these tools, I hope when I'm doing this stuff, you're able to follow along. When charts get like this and you zoom in, they get a little flat and fat and not as clear and easy to digest. Make sure you hit this auto button. It will auto correct everything so it's much easier to read, right? And then you can adjust things as you will. So you can just see on the 4-hour time frame, this thing has just been skirting along this support line, and a break below this would give us a pretty good opportunity to try and hit some of these targets. First target right here, that one's going to be an easy one. So let's talk about that for a second, because this one could happen much sooner than later, and let's be ready for it. Okay. So what I'm looking for is I am looking for a break. Let's go ahead and add some more support levels here. So the more support levels you draw, the more it'll be clear to you what needs to happen in terms of price making moves, okay? So I'm not saying just start drawing lines. What I'm saying is find areas where price had a sell-off and rally, sell-off and rally, right? Sell-off, rallied a little. Now this is a 4-hour time frame, so it's not too short, right? We've got 4 hours per candle, so it's fairly significant here. So this is a decent support line, and then this is the more significant one. This is one that's made many touches, right? So if we can get a break below this, we'll want to do the exact same thing I just described with the euro dollar. So closing below this area here, trading below it, and then setting our stop up here. So let's take a look at that. What would that be like? Let's just say it's from there to there. Okay, so that's an 80 pip stop. That's kind of a large stop. So what I would do is I would set a conditional order, meaning not conditional to in the terms of the platform, because there's conditions you can put on your trades. What I mean by that is conditional to my trade, meaning I'm going to set a stop up here just in case God forbid I get, hit by a bus and I can't manage my trades. I don't want there not to be a stop, right? I want to put something conditional in. But what I would do is I would watch this. If this starts trending back up into this area, right, we're probably just going to see price continue to mosey on, trickle up a little bit. That being the case, then we might get out sooner, right? So if that were the case, let's just say we're seeing it do a little bit of this action right here, come back up, making more support, right? Looking like it's found some ground, found its support area, and it's starting to make its way a little higher, right? Well, I would look at that and I would say, okay, I don't think this is a sell-off we thought we were going to get. So I look at that and say, oh, okay, that's about 50 pips. I'm going to go ahead and walk away from that. It also helps me figure out how many contracts I can buy or sell, how much I'm going to risk. So knowing that I don't really want to risk more than about 50 pips helps me figure out how much to risk or how many contracts to get in. So that's what I'm looking for. I want to see this get below here and then target number one. Let's see how many pips is to target number one. It's a solid 85 pips right there. Target number two is down here. That's going to be a much bigger target. And that would be something that would be a much longer push. Now we'd be talking about a short-term trend direction. But just thinking about it for a second, that would be all the way down to here. That would be a 400 pip move, right? So almost a reversal of this entire movement. In order for that to happen, again, a correlated sell-off in the market would have to happen, which we'll go look at. So here's a trade that is coming. It could be coming, I mean. So let's keep our eyes open for this one. This could be happening sooner than later. But again, I'm looking for this to break below these areas, right? So watch this carefully. I'll send out an announcement if I see this happening, but just keep your eyes peeled for this one. If it starts to break below there, remember, we're going to keep our stops short. We don't want to risk too much here because it just could easily reverse on us. But like the euro dollar, it just kept pushing. So here's one. Let's look at another one here. The yen pairs, I'm not super excited about yet, but I think there's been a lot of overextension on this one, the Aussie yen, and I would like to see this come back down to here. And the reason why is if we blow out to a weekly time frame. I showed you guys this a couple weeks ago. Where are we? There we go. No, that's not it. Was that it? No. There we go. Okay. This was a beautiful pattern, very long-term pattern. So still worthy of reviewing, right? We've got a reverse head and shoulders here, right? And then the neckline was roughly this area here. Well, it's breaking out of that. But this is a weekly time frame. And as you can see, every time this pair rallies, you can see right here, sold off really well, all the way down to here. Okay, that's a 700 pip move, right? It eventually came back, didn't it? Came back quite a bit. Came back nearly 6 times of what it sold off to. On this one, we are almost the same, aren't we? So I anticipate we're going to get a little bit of a sell-off for multiple reasons. On a daily time frame, we have the same issue as everybody else right now, or as everything else that we've been following. The gap, right? Missed pivots, right? Targets on the table. So here's another opportunity we want to be mindful of. New Zealand yen. This one's a little bit better looking for me, just because it's got some more support levels that are easier to follow in terms of a breakout. However, this level right here, it did find a consolidation. So if it were to break out, it might be short-lived, unless again we get that correlated sell-off. But I could see it finding support here. But just running down the charts here, you guys can just see that there's just lots and lots of overextended movements here that could be providing opportunities sooner than later. The the Australian CAD, this is something that I have been long and short in for quite some time. And we will be doing that eventually in our sessions. Is what we will be doing hedged positions, and I'll tell you how we do those another time. I'll probably do a whole session on that. And hedge positions, if you have never heard of it, or sorry, you probably heard of it, but if you haven't heard of it, a hedge position is basically we are trading this in 2 different directions. We're buying it and we're selling it at the same time. Okay. Now, typically that can be a very risky strategy. So you have to be very well prepared on what your bias is. You have to have, you basically have to have everything thought out and in terms of how you want the overall price action to work out for you. Meaning, I'm certain that this price is going to come back to a specific target. Meaning, if I'm long in this right now, I bought the break out of this. I think price is going to come down, so I could sell that. So things like that, but we'll get into that another time. So you can just see there's plenty of opportunities here. The Euro Aussie, I can really see this one coming back. This missed weekly pivot, I can see that happening. But you can just see there's a lot of opportunities. The Aussie dollar is the closest one on the table. The Euro dollar, this thing could easily just keep running. We hit one weekly pivot there, and there's another one down here. There's plenty of targets for us to tackle here. Here's some daily pivots that haven't been touched. So here, I think this is a daily pivot. Yeah, there's another one. Or was it? Or was it? Let's see here. This is a daily pivot that didn't get touched. Here's another one. So just lots of targets that this could easily keep doing. However, I think I would have a pending order here, or a potential pending order here, guys. I would like to see this thing retrace a little bit, just a little, before eventually making its move. But that might not happen if it just continues to weaken, the dollar strengthens. It could just keep going. So let's be aware of that, and let's go ahead and put a alert right now. Let's be prepared for this to make another breakout and head on down to these missed pivots. 1, 2, 3. Okay. So let's be alerted on that. If it does, go ahead and put in a sell order there. Let's do a quarter of the risk that we would normally do. You know, if you would normally risk about $1,000 on a trade, let's only risk about $250, $300 on the trade. That being said, what would that be? It would be roughly 50 pips. I'd probably put my stop around here, give it some room to breathe because it might need it. And that being the case, we could do anywhere between 3 to 5 contracts there, right? So 3 to 5 contracts there, something like that. That would be on $1,000, or vice versa, 300, doing 0.25%, 250, 300. So anyways, stops up here roughly, and target, we got target 1. That's a little too short. For me to be risking 50 pips to only get 25 out of it, we don't want to have reversed R and Rs. Okay, what do I mean when I say that? We do not want to have an R and R that looks odd. Meaning an R and R should always be roughly risk to reward. It should always be 2 to 1, meaning you're risking 1 to make 2, right? We don't want it to be the opposite way. No, I don't need this. Anyways, okay. So let's. That's all I've got on that one. Let's be prepared for these trades. Let's be prepared for the euro dollar. Let's be prepared for the Aussie dollar. Let's go ahead and take a look at our market overview and look at that dollar index. On a daily, this has made a significant, well, not significant, but it's definitely made a rally, right? 1, 2, 3 consecutive days. How much further does it have? Who knows, right? But it did make a nice breakout of this. It did hit this weekly target right here, but it's got some left on the board. It's getting further and further away from this weekly, this 200 moving average. You can see right here, it got really far away from here, and then it rallied back, right? So we could see this come back a little further. I don't know if it's going to come all the way back to 92. Hard to say. But let's take a look at this on the weekly chart. We have come to a consolidation area. So even if this doesn't rally back, persists lower, it's going to get stuck in this minutia here, right? In the weeds. Okay, this is a significant area back in from January all the way to April of 2018 that it just got stuck between roughly 88 and 90. So it could easily do that again. So it's possible that this doesn't have much room left to go down. But again, as I've said in the past, this thing doesn't need to crash all the way down to 80 for the dollar to be weak and other pairs to rally against it. It does not need to do that. Other pairs can rally against it just by the pure fact that their currencies are stronger based off of their interest rates and other correlating factors. But I just see this being an area where it can get stuck. Let's go ahead and look at the S&P. This thing is just moseying on up, chugging through. It's breaking out of these this widening pattern a little bit, but it's also making a huge gap. Come on now. It's making a very, very large, you know, a very, very large gap. Well, it just doesn't want to cooperate. Work with me. Work with me. I forget. So you can just see it right here. I keep talking about this because it needs to be noted. We are talking about a 900 point gap between the moving average and price. All you have to do is look at it. Last time we had that was 600, sold off. Last time we had that before, right here. You can just see, more importantly is percentage. It was about 30% there, about 25% there, about 25% there, and about 30% there. So yeah, we're getting more and more exposed to a sell-off. And short term, yes, I believe it will be short term. Back down to these previous highs here that are now support. Yep, maybe even down to our 2019 high, 2020 high right there. So be prepared for that. But like I said, if you're in some positions now and you've made some good profit, but they're long-term trades, I wouldn't sell out of those. Thinking more of the shorter term stuff, and especially if you have cash on the side right now that you're looking for opportunities, I think there's going to be plenty of opportunities coming. So just be aware of that. Let's take a look at our trades. Oh boy, last week was fun. We just had so many things going on all at the same time, which is always exciting. Okay, Bed Bath & Beyond. This trade, oh God, this trade was such a mess. So let's see here. Gosh, I forgot to have the chat open here, guys. Sorry about that. Tony, you need to get snowboarding lessons, my friend. I will help you. I used to do that I used to teach people how to snowboard when I worked at the ski mountain in Boise. It was a long time ago, but I still remember a few tricks here and there that could help you out. But anyways, we'll talk about that later. So Bed Bath & Beyond, this was a mess. I was actually excited for this thing to break down. And let me tell you why. That would not have been profitable for us in the short term, obviously. But I didn't expect it to go much more than right around here. And then I expected it to continue on up. I was expecting it to get held around this support area here. That's what I was looking at, which is still good. As long as this doesn't go too much higher or even if it does, it could still get held up here. And then it just didn't. It broke out here, which is great. It's good for our trade. But the reason that I was a little disappointed is because the way our trades work, if you remember, is when we have, let's write this out for a second. When you have a sell put and a buy put, right? Or you're short and long. Short and long. If price breaks below here, it is good for our buy put, right? We have two option contracts on, right? One is hedging the other. If this can stay flat from our short strike price, which was either 18 or 18.50, depending on where you got filled, we're making money on the premium only, which is great. If you have enough contracts, you're making good money. If it can't hold below, or it can't hold that level and starts trading below, depending on how low it goes, our long puts start to become much more profitable, right? They start to increase in value. And why is that a good thing? Come on. Increase in value. Why is that a good thing for this to come down when we know that we're gonna lose money on our short? very simply put, you guys, the reason that that can be a good thing is, well, several reasons. First off, put this over here. First off, we can make money on our long put. So for example, at the time that when we talked about this on Monday evening, before it shot up, our long put, our entry price was, let's bring that up actually. Okay. Where was it? Okay, so our entry price was, I should say buy 17. There we go. So we bought it at 89 cents. Okay, let's go back to our chart here. Bought it at 89 cents. So on Monday evening when we were talking, this was at, I believe, 1.10 roughly. Okay, so as you can see there, that's a 20 cent profit on that original contract. So as this continues to go lower, this increases in value. So what does that mean? Well, we're going to make money on that trade because we're going to close it. So we make some extra bucks on that one, and we still made money on collecting our premium, right? So we can add all of that as this goes down. And then if it's below our short price, if it's below the 18 strike, excuse me, we're going to get assigned at 18. You're going to add all this profit. And so that way we have a break-even price in case we don't like it anymore, but I do like it, right? So I'm watching this very closely and I'm thinking, okay, if it continues down, let's pretend that it was still there. If it just continues down on below, but then holds here and then makes its rally, well, what happens there? We collect all of our profit. Come on. We collect all of our profit. So let's just say hypothetically we got out there at with a profit of 20. So we're making money on that. We're making money. Let's take a look at our trade here. How much did we make? We made 46 cents on that, 46 bucks per contract. So there's 20 plus 46. Okay. So now per contract, whoops, we are up 66 or 66 per contract. Okay. Contract. Yes, yes. Okay. So 66 per contract. Then if this thing rallies, so gets above our 18 strike price, so right now it's at 20.66, that's an additional $2.66 that you add to that. So now our net total is 266 per 100 shares, which we would probably only do 100 shares, right? So there's $266, 2.66 equal to 266 plus 66 per contract, right? So now instead of making our max profit of $46, you can see right there that we just went from 46 to a potential of 266 plus 66, $332, right? So just right there, you can tell that that's an increase of nearly 10 times. What is that? 8 times? Anyways, the point is that that's why this strategy can be so effective in terms of being wrong or being right. What is the answer? Am I wrong or am I right? Yes. Yes, I am. So I wanted to go down because I wanted to make more money. I wanted to go up because I was happy with making my premium. Either way, I'm happy. So I hope that kind of makes sense. So this one was a good trade. We walked away. Hello. There we go. So there it is. We are closed now on this one. There we go. And we walked away with our max profit of 45. So you should have made $45 per contract on that one. Okay. Okay. So there's that one. Now let's talk about our American Airlines trade. American Airlines did work out in the way of Bed Bath & Beyond. That, anyways, the way I was hoping to. This one's a little different. It's not as resilient as I thought it would be, and if you're thinking that this is a flag pattern, it's not. A flag pattern needs to be about half of this width, becomes unvalidated. Now, the reason I'm still excited about this trade is because of this area right here. If price can hold this area, I can see this just continuing to rally. And we got a missed pivot right here, so that can easily rally. Where are we on this trade? So right now, we own 100 shares of it. We should have been assigned. Everybody should have been assigned on this. If you guys followed my, I was very active in the chat. I was very descriptive. I hope everybody saw all the orders come through. So you should have made some moves on Bed Bath & Beyond and American Airlines. Right now, we should all own American Airlines, because what we did was we closed our long put. Where did we close our long put? Yeah, there it is right there. Okay. We close our long put. Come on now. There we go. There we go. Okay. There it is. Okay. So I got out with mine at 30. A little bit lower than I was hoping for, but you know, that's just the way it works sometimes. If you got a higher price, great. Little lower price, that's fine too. So we got out at 30. All right. That leaves, sorry, I'm going back to this now. That leaves our original short of 1650 with a $1.16. Okay. But we have to add this as well. So let's do a little math here. And, you know, I hope this is starting to make a little bit more sense on how this strategy works. And I'm just going to keep going through it. If it doesn't, rewatch some of the videos. And as I promised, I'm working on those videos to kind of give you a little bit more information how these work. But I think the best way to learn anything is just by doing it. So we made a $1.16 on the short side, right? Minus 68, and there's our 48 cent profit right there. Well, we kept that profit. We kept that profit at first, right? So once we sold our long put, then it went back to the $1.16, right? Well, we have to take into account that we sold it at 30, which is fine. So 68 minus 0.3. So 38. So now we take 116 minus 38, 78. Okay. So now we have $78 of profit on this particular trade. So what we do now is we take that and we subtract it by our strike price. Okay, our short strike price was 1650, and we minus that by 78. So that makes our break even on this trade. That makes our break even on this trade at, what was it? 1572. Okay, so yours may be a little bit different than mine by you know, a few pennies here and there, but our break even is roughly right about there. So I'm excited about this for several reasons. One, we're long the stock and we have a break even here. Two, this is where we are going to mitigate more of that risk. Now we own 100 shares. And when you own 100 shares of a stock, you can sell covered calls. You cannot sell a covered call without 100 shares. That would be a naked call, and we don't do those, not with me anyways. So now we can sell a covered call on this. So let's go ahead and take a look at that. Wrong stock. And let me know if you have any questions while I'm going through this. Okay, so taking a look at the January 29's strikes, and then we might take a look at the February 5th, depends. Let's go to a single contract. Okay. So if I look at this, let's go back to our price here. This area of about 15 is holding fairly strong, and I want it to hold strong. Okay, I want it to do that, right? So I might look at this right now and I might say, okay, I think that price is going to hold this area, and if it doesn't, great. If it does, great, right? It's one of those situations. Is it better if it holds or breaks below or breaks above? Yes. So the answer is yes, because we own that 100 shares. So we don't care really what direction it goes. If it continues to rally and we sell a call here, we're going to make the money on that premium, okay? And then when as the stock rallies, it increases in equity value. So the short is losing money, but the long is making money, right? So we want to be a little careful because if we know where our break-even price is, we don't want to put our short call below that, because if you put your short call below that, as soon as it starts breaking above that, you're going to start losing money. You have to put it at a place where our break-even, you have to put it above roughly our break-even. So we know our break-even is in this area. So 16 bucks, we're looking for our 16 strike. So if price stays below the 16 strike, we're going to make, well, we're going to make 100% of our profit on that. If it breaks above, we're still going to make our premium, and then we'll have made, so we'll have made our premium, then we'll have made the money on the rise of the stock, okay? So either way, this trade is working out in our favor. So that's why we're going to sell a call on this. Now, does anybody have any questions on how this is working? Right? So one more time, just want to make sure everyone understands this. Our break even, okay, break even is 1570. We'll just put 1570, it's give or take. Okay, we're going to sell a call. Okay, covered call strategy. We're going to make the premium on that. Let's take a look at those strikes right now, or those premiums. They're not, so this one's good, but the strike is not good, right? So I don't like that, because remember, our break even is higher than 1550, so we don't want that. So we have to go to 16. It's not bad. 55 bucks for that. It's not bad. So 55 bucks. Anyways, let's just pretend that that's what we're getting. So we're going to take the 55 bucks on that one. If price stays below by expiration, we collect all $55 of that. So let's just say it continues to drop. We sell another covered call and we make our 55. So I hope that's making sense here. When you sell a covered call on this, it continues to move your break-even price, okay? So if price holds, so for example, by expiration, if price is below 16 bucks, we collect our 55 bucks. Well, I mean, we've already collected it, right? So what we're going to do is we're going to subtract that by 1570. So now we're chipping away at our break even, right? Oh, does this make sense to everybody? We're chipping away at our break even. So now our break even was 70. Now we minus 55. Oop. No, that's right. Now our break even is down here at actually current market value, right? That's if price were to do that, which is good for us, right? So then we could sell another covered call if we wanted. Or if we like this stock and this is something we want to add to our portfolio for a little bit longer duration, maybe a few months, maybe a year, then now you've got an entry price of basically 1550, which is a really good area to buy. But for me personally, I'm not going to hold on to these stocks for very long, because I want to free up my margins so I can do this all over again. Which we are. We're going to do another trade on American Airlines because I still like it. Okay. So 1550. There we go. Okay. So I hope that has made sense. We are going to be looking to sell a covered call on this one. Okay. I'm still waiting on this one. I want to see what happens with price right here. I don't want it to break out too high because then we'll miss that opportunity to sell it. But if it did do that, that would make me feel better. Why? Remember, if price, excuse me, if price does break out and at expiration is above our short call, it will be called, our 100 shares will be called away. So the potential, if this thing starts to just beeline it this way, well, the potential of the equity per share, right? The 100 shares, we won't be able to take advantage of that. So that's why I want to be a little cautious here. If it breaks out of this and starts to rally, I'm going to not sell I'm not going to sell a call. I'm going to let this get to break even, and then I'm going to start to see the profit. If this seems like it's holding this area and potentially could sell off, then I'll sell it. So we're going to wait. We're going to wait on this one. This could be one of those this could be one of the things I was talking about, a video update. This could be what I do here. Okay. Where I see this potentially happen, this would be something that I would throw in the update. So I hope that explains what we're doing with American Airlines in detail. Okay, we own the shares. We own the shares at 1650. This does, by the way, this does not take into account your premium that you made on your trade. That's why it's very important that you keep a detailed tracker. So everybody should have this. These are all the trades we've been doing so far. Everybody should have this. So it's important that still open long 100. Oops. Okay, so this is how you figure out exactly where your break even is. You got to calculate that. This will not tell you that. So if you're thinking, gosh, why am I down 140? I should really only be down, 1570. 1570 should really only be down about $60. Well, you are only down $16. This is not going to take into account how much money you made on the premiums. So this is just something that we do as a strategy. Thinkorswim doesn't care about our strategy. They only care about what's off the table, what's on the table, right? So what's on the table right now is we got assigned at 1650. So you can see why it says that. Okay. Again, any questions on that, please throw them at me. Most of you have not done the strategy before. So if there is a question and you're not saying it, you are not helping the group out, because I assure you, if you have a question, but you think everybody already knows it, they probably don't. Okay. Or if they do, it's a great reminder. No question is a rudimentary question in this group. Okay. Even if people already know it, it's always a great refresher to bring up something that could be a known fact or something, whatever. So make sure you guys are always asking questions. Really quick, there was a trade that I am looking at. There was a couple. Let me take a look here. One of them was GM. Oh boy, GM is having a great day. Gosh, look at that. It's those Chevy Silverados, man. Tell you what, everybody wants that truck. I don't know if you guys remember, there was a commercial way back in the day. Silverado keeps on coming. No. Anyways, I never thought anything of the Silverado until I bought one. So this is you're welcome, GM. This is partly because of me, because I bought a truck. So GM's killing it right now. I was looking into a trade on this one back down here. And well, this thing is just rallied. So we'll wait for a little bit of a sell-off, but I really like this stock. It needs to correct a little bit. Why this is just punching on through is it's a little odd. Earnings are over here. So I'm always hesitant to jump into any stock before earnings. Earnings is the 9th of February. So I was wanting to get in on the February 5th. GM. Yeah, I was wanting to get in down over here before earnings, but this is exploding as if it's already gone through earnings. So there's that. So we lost that one. But we're going to keep an eye on it because I still think it has a plenty of more room. MGM. This is an opportunity I think is going to this is going to be a bigger opportunity, I think. I want to see this correct a little bit down here, just a little bit, and then start doing our bullish strategy. We could do a bearish strategy on this, but I'll have to think about that one. I'm always extremely cautious. I'm always cautious about any trade we take because as a group, any trade we take, we follow through to the end. You know, like I always tell you guys, I'm not going to throw out trades out to you guys and then say good luck. That's not what we do here. You can always send me stocks and I'll give you my general perspective on them, but I'm not going to throw trades out and then just move on. So on this one, if we did a bearish strategy, I'd have to really think about it. So in terms of bullish strategy, I would like to see price come down to this area, maybe down to this missed pivot, and then I'm interested in getting long MGM. There's one more trade that I think has an opportunity right now. What was it? I had my notes. I think it was FCX. Yeah, it was FCX. Okay. Okay. So this has made a really nice rally. And what I'm looking at for this one is I'm looking at just another bullish strategy. Okay. Right now, let's take a look at this. FCX. If you guys are wondering where I come up with these stocks, if you were wondering, I do a scan in the TOS platform. Okay. Nope. Where is it? There we go. I do a scan right here, okay? And there's lots of different things that you can do with this. On this one, all I was looking for were stocks that were between $5 and $50 and had a minimum volume of 1 million. So that's where I get a lot of my stocks because as you noticed, where are we? A lot of my strategies are based off of the potential of owning the stock, right? So I don't want to trade, say, Amazon, for example, because if Amazon started to sell off and I needed to get assigned it, I need to have $300,000 to pony up for that one trade. So, you know, that's a very serious, considerable amount of margin to have tied up in one trade. So that's why we don't trade those. I'm looking for things that are $50 and lower. Okay, so FCX is why that's one popped up on my list. So let's go to trade. Let's take a look at FCX. I'm probably looking at the January 29s, same thing again. Let's take a look at 29. Okay, 29, 50, and 28. So let's go ahead and right click it. Let's go down to deep and wide, 2 strikes, vertical. So, you know, we're always trying to get a minimum of 40. So 40, 60, we're always trying to get a minimum of that. It's a little below right now. So we're going to wait on this one. I would like to see this get a little higher. So what we can do is we can put a pending order on this. And how we would do that is we would just put GTC. and we would increase this to say 45. I'd like to see at least 45. I'm really not interested unless we're going to get 45. Now this stock is doing incredibly well. I've done a little bit of research on it. I really like this stock. I think it's got a lot more potential to go. I also think it's getting big in terms of our gap here, right? So we have a pretty large gap right now. So I can see this easily selling off, but I can see it holding around this 25, 26 area. So doing a 29.50, just a little bit below where its current price is. I can see this holding and continuing on, but maybe down here. So a pending order of the 29.50. Let's go ahead and delete that and take a look at just 29. Let's take a look at that price real quick one more time. So 29, yeah. So let's look at that really quick. Go ahead and left click. Actually, you can just hit the sell button right there. No, you can't because I don't have a vertical. Okay, so let's do it again. You go to sell all the way down deep and wide, 1 month 2 strike, vertical. Okay, so now it's 33 cents. So it's little now we're going to see a lower premium because we're looking for a lower price. So this could be an order. In fact, I actually like this. This is an order that I'm comfortable with at 40. And how we're going to get down to 40? Simple. This is going to have to sell off a little bit, which I can see happening, okay? So I don't mind being owner of this stock at 29. Even if it comes down a little bit, I can see this continuing to rally, okay? So looking at this, let's put it at 29.28, okay? So this is going to be a live order. We're going to change this to GTC. That means that this trade will not cancel out. All right, David, take care. This trade will not cancel out until we cancel it. So this is a live order, okay? So again, FCX, January 29s, selling at 29, buying 28. We're looking for 40 cents. Make sure you adjust that. Let's go ahead and confirm and send. Everything looks good, and send it. Okay. So we'll keep an eye on that one. It may not fill even this week. We'll see. I think it might though, but we'll keep an eye on that. And remember, we've got this live order right now, American Airlines, and we're going to make some moves on this one. So make sure you guys pay attention to the chat. And that is about it, you guys. That's all I got for you. So if you guys have any questions on anything that we talked about today, make sure you send me a message and just keep posted on the chat, like I said. And we have a lot of good things coming. There's some trades coming, you guys, so make sure you're diligent about that. Okay, you guys, I'm going to end this right here, and successful trading.